Chetan, where are you putting inflation expectations, which seem to be relatively tame within the Chinese context? And do you think that could change, considering the potential supply chain dislocations that could come with the lockdown in Tianjin?
Well, I think the driver for inflation for the region is really what's going on in the consumption sector. So if you look at Asia's GDP trend, including China, we've seen exports going well above pre-COVID levels. We've seen private investment going well above pre-COVID levels. But the line item, which has been still, not only still below pre-COVID path, I should say, for consumption. And that's what is really holding back consumption in the region, including China. At the same time, if you look at the labor markets are not really that tight. You look at wage growth across the region, that's also kind of well behaved, which is exactly the problem in developed world where labor markets are tight. But in Asia, we don't have that. So we think consumption as well as labor market is driving Asia's inflation, not really the supply side disruptions.
Understood. Chetan, do you expect more stress and default risk in the property markets in China, and which are the weak link? And to what degree is that going to be a pressure point on headline growth?
Well, we think that the sector will still remain challenged, and the concern regarding growth contribution from the sector will still continue to be the case in 2022. But if you look at what the market is pricing in a whole lot of default in Chinese property sector. So our credit analysts are actually constructive and saying that, a lot has been priced in, and probably a lot more than what the fundamentals warrant. But having said that, from a macro perspective, property sector will still continue to be a drag. It's just that we think that the actions that taken by the government so far will prevent a financial shock out of property sector. And the drivers to growth will really be the other factors that I mentioned earlier.